tal amigos? I am Rodolfo Ramos, Bradesco BBI's Mexico strategist, and welcome to this What's What in Mexico, our bi-weekly video product to give you our latest views. So as you can see here today, we're standing here in downtown Manhattan in front of the New York Stock Exchange, which is home to many of our fellow Mexican corporates. So I hope that you find this background here entertaining. We have a lot of ground to cover today, so we'll jump right into it. We're going to be covering, as we usually do, 3 topics. The first, we're going to give you our thoughts on the current tariff situation. Second, we're going to be covering some of our thoughts and analysis that we did on what could happen to Mexico should the U.S. go into a recession. And thirdly, we're going to highlight some of the things happening domestically within Mexico that you shouldn't miss, or you should keep on under your radar. So kicking off here with our first point around current tariffs, to us it has been quite astounding how, despite of us getting a little bit more clarity on some tariffs, there's still uncertainty as to how these are implemented. And a couple of weeks ago, we were able to catch up with our good friends at AMIA, and we learned actually that some of these tariffs are stacking on top of each other. For example, there's some exports on the auto industry side that are facing tariffs as high as 52.5%, which is 25% IEPA, 25% auto tariffs, and 2.5% most favored nation. This was news to us, it goes to highlight the level of uncertainty that we're seeing. Also, the auto sector interpreted in a much different way this pause on tariffs that the U.S. engage. Of course, this is very good news for tariffs more globally speaking, but for Mexico, it puts it at a disadvantage, especially because once all of this is concluded and we do see 12% tariffs on non-USMCA exports, the reciprocal tariff level is 10%. No, so that relative comparative advantage for Mexico is no longer there if this all continues to hold as it is today. Of course, it's very uncertain, but this was an interesting perspective that we learned from the auto sector. We have seen some new developments on the tariffs front. Trump threatened to levy a 21% tariffs on tomatoes in July. This is also something else that negotiators will have to deal with. And of course, we have on May 3rd, auto parts potentially joining the rest of the auto export tariffs that the U.S. has already levied on Mexico. No? So this is going to be a very important date for us to keep in mind and see how negotiations are moving forward. Of course, for us, the next step is going to be naturally the USMCA review. And we continue to see very strong collaboration and cooperation between U.S. and Mexican authorities on various fronts. No? We saw recently the agreement over this water rights issue. We saw also an agreement over the screwworm plague that was threatening livestock and the exports that Mexico carries on to the U.S. So this has been all very, very positive news. We recently saw Mexico's Minister of Finance, Edgar Amador, meeting with Deputy Secretary Chris Landau. So we are starting to see more interactions there between Mexico and the U.S. government, and we believe that this just contributes to a more positive outcome at the end. Of course, Mexican negotiators will strive to have an anticipated USMCA review. As you know, the official timeline doesn't kick up until October, but we do believe that it is of the essence for us to have a review as soon as possible for this clarity of our investments to clear up and companies to be able to move on and plan go ahead with their plans. So this USMCA review, in our view, is going to be the next hurdle, and we've already seen U.S. authorities starting to mention other issues such as labor, for example. So we do believe that at the end, once the dust settles, Mexico and the U.S. will continue to integrate further, which explains part of this constructive view that we have continued to highlight on and on. The second point here, and it's a little bit tied to this U.S. integration that I just mentioned, is on what would happen to Mexico should the U.S. head into a recession. It's very difficult for us to draw direct extrapolations from previous crises, but what we took a look here at BBI was see how Mexico has fundamentally changed across different metrics over the last 20 plus years, and see how that has behaved to today. And while Mexico indeed has integrated further with the US, especially after the first Trump presidency and the COVID pandemic, Mexico continued to gain market share of the US import market, for example. So this integration has grown closer, but Mexico stands in a much better shape than it did back in, whether it's 2000 or 2008 in previous crisis. For starters, the real wage that Mexican labor force enjoy is much higher. No? So this should give a greater resiliency to this consumption theme that we have continued to highlight. Second, we see savings as a percentage of GDP having doubled over the last 20 years, thanks to the Afore system, of course, but also the Infonavit, these pension funds, so these housing funds. So we do believe that this creates a buffer, not only for capital markets, but also for government finance, which are increasingly dependent on the domestic front. We've also seen a much better capitalized banking system than we did 20 years ago, which will help if we end up in that situation of a U.S. Recession. Fiscally speaking, debt to GDP did increase compared to the last 20 years, but on a relative basis, we're still in a very good shape. And most importantly, politicians continue to abide by fiscal austerity, which is something that you don't see often, particularly in Latin America. So this is also an important anchor. Fitch Ratings recently reiterated this stable outlook for Mexico. So we do believe that this is a strong point on Mexico on that front. And lastly, we have valuations from the equity side at historical levels. We also have long-term rates very, very high compared to historical episodes. So this also gives a greater buffer should things turn sour, and leaves investors with greater margin of safety. So these are some of the key aspects where Mexico has changed, and we believe that stands much more resilient compared to previous crises. Of course, it's going to be very difficult for Mexico to navigate this scenario, but nonetheless, we do believe that there are a lot of pockets of opportunities for investors at the current time. So closing here with the third and last final point, we have continued to see a lot of things happening domestically speaking that we shouldn't keep off our radars. Of course, right now the tariff situation is taking all of our bandwidth, but it's important to keep in mind several things. I would say one of the most important ones is on the financial regulation and policies having to do with the banking sector specifically. Next week, we're going to have the banking convention. Sheinbaum is expected to give a speech here. And we do believe that it'll be very important for us to monitor how Mexico is intending to lever, how the Mexican government is intending to lever the financial sector in Mexico. We have Citibanamex trying to dispose of its banking franchise in Mexico, and we see fintechs also trying to make a headway in the Mexican market. So I think this is going to be a very dynamic sector for investors to monitor. And of course, the other aspect that we need to be very on top of is, of course, the tax reform and whether we ended up, how does that look like? Still early to tell. Sheinbaum just very recently, a couple of days ago, continued to reinforce her fight against evasion. These metrics and these ways that Mexico has been trying to increase revenue spending without engaging in a formal tax reform. We do believe that this has a limited runway. So we do believe that this will be important to monitor. And of course, another host of reforms, whether it's telecommunications, whether it's antitrust and the implementation of them, it'll be very critical for investors to monitor. So this is what we had for you today. We hope you find it useful, and feel free to reach out to us on social media or directly through our email with any other questions that you might have. Take care, amigos, and have a great one. Ciao, ciao.